And Walmart is not the only consumer stock reporting earnings this morning. Chris Valerio is at our markets desk with all the shopping activity. Ms. Valerio?
Yes, all the shopping activity, but we're not shopping here. We're talking about shopping, though. Here's the deal. Kohl's is the first company I'm going to point out. Had a second quarter profit that fell 3%. Drop in same-store sales kind of hitting the bottom line. EPS, though, I should know, coming in about in line with estimates. Now, it had some positive signs. For instance, the cost of its revenue came down to about 60%. But the reason you're seeing the stock trade lower today is mainly because of its forecast. Again, the guidance, so important for these companies. So the company's saying that its cost, or I should say the annual profit is not going to be what some people had expected, and that's why you're seeing a drop there. Now, other company I wanted to point out was Urban Outfitters. This is a very different story. Urban Outfitters out with a second quarter EPS that beat analyst estimates. One thing I wanted to point out is that it did actually see revenue growth versus a decline last quarter. That's certainly something investors like to hear, especially in this earnings season where we've had so much focus on EPS versus revenue growth. It's a tiny growth, I should point out, just about 1%, but at least it's a growth. Also, we had Dr. Pepper Snapple. This is a consumer stock. The company reporting second quarter profit that did beat analyst estimates. More importantly, again, raising its forecast, Scarlett. And all of this, of course, on a day when you heard Kathleen just in the last block talking about these retail sales unexpectedly falling in July. So a lot of attention on these reports.
Absolutely. Now, I know you've been crunching the numbers. How have the retailers done as a whole this earnings season?
Well, let's talk about the broader group to start out with, and those would be consumer discretionary stocks. So if you take a look at how we've done, as of last night, 78% of S&P 500 consumer discretionary stocks have already reported, on average, earnings down about 16%. But you compare that to the broader stocks, and you can see consumer discretionary stocks actually doing much better than the broader averages. Now, retailers specifically within all those different kind of sub-segments of consumer discretionary stocks doing the best, only down about 7%. That said, they're only halfway through. And of course, Scarlett, worth mentioning again, and you all know this, but the consumer is so important because it makes up 3/4 of the U.S. economy. Back to you.